The Federal Reserve just made a big move on interest rates. Here's what it means for you. October 29, 2025. In a highly anticipated announcement, the Federal Reserve released its latest FOMC statement today at 2 p.m. Eastern Daylight Time, shedding light on the current state of the economy and its plans for monetary policy. But here's where it gets controversial. While the Fed acknowledges moderate economic growth, it's also taking steps that suggest growing concerns about the future. Let's break it down in a way that's easy to understand, even if you're not an economics expert. The Fed's statement reveals that the economy has been growing at a steady, if unspectacular, pace. Job growth has slowed this year, and while unemployment remains low, it's started to tick upward. Inflation, a hot-button issue for many, has risen since earlier in the year and is still higher than the Fed's long-term target. And this is the part most people miss. The Fed's dual mandate, maximizing employment and keeping inflation at 2%, is under pressure, with uncertainty looming large over the economic outlook. To address these challenges, the Fed decided to lower the federal funds rate by 1/4 percentage point, bringing it to a range of 3.75% to 4%. This move is aimed at boosting economic activity while keeping inflation in check. However, here's the controversial bit: not all policymakers agreed. Stephen I. Miron wanted a larger rate cut, while Jeffrey R. Schmid argued for no change at all. This split highlights the delicate balance the Fed must strike, and the differing opinions on how best to achieve it. The Fed also announced it will stop reducing its securities holdings on December 1, a decision that underscores its commitment to supporting the economy. Going forward, the Fed will closely monitor incoming data, including labor market conditions, inflation pressures, and global developments, to determine if further adjustments are needed. But here's the question that's sparking debate: is this rate cut enough to fend off potential economic downturns, or is the Fed moving too cautiously in the face of rising risks? For those keeping score, the policymakers who voted in favor of the rate cut included Chair Jerome H. Powell, Vice Chair John C. Williams, and several other committee members. The dissenters, Miron and Schmid, represent opposing views on how aggressively the Fed should act. What do you think? Is the Fed's approach the right one, or should they have taken bolder action? Let us know in the comments below. For media inquiries, reach out to email protected https://www.federalreserve.gov/cdn-cgi/l/email-protection #761B131221F173610041 458111900 or call 202-452-2955. For more details, check out the implementation note issued today. https://www.federalreserve.gov/newsevents/press releases/monetary20251029a1.htm. Last update, October 29, 2025.